It is 4 o'clock, everybody, so we will go ahead and get started. I'd like to welcome you to the NNP Symposium. This is the 5th NNP Symposium that we have had the pleasure of offering. And that's all thanks to the Eric P. Newman Numismatic Education Society. They make it possible for you guys to all come for free and listen to all these good presentations that we have. So we just thank them for the opportunity. I'll go over a few things, which if you've seen any of the other presentations this weekend, you're already tired of hearing about, but I'm going to say them again in case we have any new faces. We have a Q&A button at the bottom of your screen. You can put all your questions in there and we'll have a Q&A time at the end of the presentation. So yeah, just as you think of them, you can put them in there. So they will all be answered anonymously at the end. And we are recording this presentation. We'll record all of them and they'll be on our website roughly 2 weeks after this NNP Symposium. So you can expect those up there in roughly 2 weeks. Just give us some time to get them edited and put together nicely so we can get them up there. And that's all I have. So I'll introduce the speaker. Bob, if you want to go ahead and turn your video on and unmute yourself, you can do that. Awesome. So everybody, this is Bob Bair. He is our speaker for the hour. We were talking before the presentation, and this is his 4th NNP Symposium presentation. I had the honor of facilitating his last one, so I've had a chance to get to know him over the past year or whatever. So that's been really fun. We're excited to have him back. He will be talking about the Panic of 1893 and its impact upon U.S. coinage, as you can see from his presentation that he has shared. So Bob, I will let you take it away.
I appreciate it very much, Andy. I'm thankful to you, to NNP, and of course to anyone and everyone who's interested in this topic. Wow, the Panic of 1893, 130 years ago. Everyone's dead, long dead, who was involved in it, but it had an incredible impact both on U.S. society and also obviously upon U.S. coinage, and we're going to explore both. Now I got to tell you guys, I'm a retired school principal, former literature teacher, former history teacher, so I can't put together a presentation without sneaking in especially some history. And for all you guys who, were passing notes to pretty classmates and cutting class and stuff, this is the history teacher's revenge, but I'll try to be merciful and brief with it. Let's take a look and see what the Panic of 1893 amounted to, and then obviously directly how it impacted U.S. coinage. Here we go. This is kind of a Broadway play illustration billing about the Panic of 1893, the War of Wealth. What you're seeing here is a run on a bank. You can tell that the people who are well dressed and who are near the front of this illustration they've already taken out their money out of the bank, which the average person who's in line there trying to get to the bank before it runs out of money and croaks, the regular people are impacted a whole lot more than the wealthy who are shown in this the War of Wealth illustration. As the playwright put it, it's a crisis in the affairs of the great financial institution, the most animated and realistic scene ever shown on the stage. Well, I haven't seen the play, so I can't comment on that, but this is an illustration of the dichotomy in U.S. society then in the 1890s Gilded Age, when society began to become either very rich or middle class or less than middle class, with the very rich people at the top not having to worry too much about anything. So, all right, every presentation ought to have some kind of a thesis statement. What's this about? Well, all right, this panic was a deflationary depression. It lasted at least 3 years. A lot of people will say it went into 1897. What did it mean for coin collectors? Man, are there a lot of scarce dates in every series from 1893, especially through 96. These are the coins that were most commonly used for everyday business then. All right, how did this happen? Why did this happen? Well, there are reduced demand for silver coinage, obviously, as businesses are croaking. We'll see stats on that. As people are out of work, not knowing what to do, as whatever relief was available was through private agencies, churches, the Salvation Army was going, then Jane Addams had Hull House and so on. But a lot of people were incredibly crushed by the Panic of 1893 and their need and the extent to which they even had silver coinage was greatly reduced, and that led to reduced demand for the U.S. Mint for those 3 to 4 to 5 years. All right, so what was this panic? We have to look at this a little bit. Deflationary depression, that's where everything crashes in. Nobody has money. Take a look at these stats. It was hard to measure U.S. unemployment at that time. But it was at least 10%, and I've seen stats putting it over 20. The Great Depression of the 30s peaked at around 24%. So these two are the major serious depressions that impacted the American population. All right, what caused it's pretty bad. What caused it? Oh, a bunch of things. It's the domino effect all over the place. Let's zip through these items pretty quickly, and you'll get the idea. You know, if you line up a whole row of dominoes and tip over the one at the end, it's going to hit the next one, and it'll hit the next one, and the next one, and the next one, and all of a sudden you got a whole row of dominoes knocked down. That's the way this Panic of 1893 worked. Number one, agricultural prices dropped enormously because the U.S. and most agricultural countries in the world had a really good year. The U.S. at that point, and Frederick Jackson Turner, University of Wisconsin historian who had looked at the 1890 census, realized that, first of all, the frontier was kind of ending. And he also noticed that it was the first time in U.S. history, the 1890 census, when less than half of the U.S. population was involved in agriculture, feeding themselves or others. Cities began to burgeon as waves of immigration, especially from Europe in the 1870s, 80s, and 90s, passed through Ellis Island and located a lot on the eastern seaboard, or for instance down in New Orleans. But okay, so agricultural prices are down, and that's going to impact those who still farm, but also those ultimately those who need to eat. Two, there's a collapse of banks who had put out a lot of loans to farmers and to agriculture. And just as the Great Depression was caused by the collapse of a small bank in Austria, a major one in Argentina went under, and that triggered bank catastrophe. As you know, they all had loans back and forth, and when someone defaults, then that can cause other defaults down the line as the dominoes continue to fall. All right, the railroads had been way overbuilt. Everyone wanted to own a railroad and be rich, king of the line, so to speak. And railroads were built largely intended to transport agricultural commodities to Eastern markets in particular, or for overseas markets. They're overbuilt and they're vulnerable as well as things start to crash. Number four, there's a run on the gold supply, and this just about brought down the United States government, came so close. We'll see more about that a little bit later. That major bank in Argentina went down. There was a provision of the Sherman Silver Purchase Act from 1890 that that forced the government to buy 4.5 million ounces of silver per month to make into Morgan dollars to satisfy free silver rights, populists, and it obviously benefited silver miners as well. But a provision of that allowed the U.S. silver providers to take payment in gold if they wanted to. And as it turned out, and especially as things were exacerbated, gold has been money around the world for 5,000 plus years. And there was a run on the treasury that just about caused the US to go under financially. All right, and number five, there was a financial panic in the United Kingdom. And as a result, when international trade began to drop, then foreign investors are also selling stocks to get US dollars to turn into get US gold out of the treasury. So that's going to become a major problem, as we'll see shortly. But all right, let's get to what this meant to people. The effects of the Panic of 1893 on Americans and the US economy. One, massive business bankruptcies. 16,000 or so businesses went under. Well, every business has some employees. All of a sudden, they're out of work. The banks, triggered by the Argentinian bank, triggered by their own overextension with loans to agriculture and railroads and so on, 500 banks croak as well. This is not a pretty picture. National unemployment, the minimum figure I found was 10%. And I had to say perhaps 17 to 19%, but I've seen over 20%. The current unemployment rate in the US, the last I saw a couple days ago, was 3.7%. And if you're up around 20% unemployment, holy, 6 times or so greater than present unemployment, these are bad times. Lots of social unrest. We're going to see a really interesting phenomenon. Coxey's Army, it was called, in 1894, but there were some really bitter labor strikes for those places that still could work as they're getting their wages cut. The Pullman strike, for instance, had Pullman bringing in troops and people getting killed, strikers getting killed. It wasn't pretty. Number 4, this was the last shot that silver Democrats, the free silver people, had trying to get free silver established as an inflationary currency to pay off the indebtedness that agriculture and the populist agriculture had, for example. Well, William Jennings Bryan ran 3 times for president and didn't make it at all. William McKinley won twice, and the gold standard became firmly entrenched. As that's what we're going to, not so, yes, silver coinage obviously is still accepted, but the basis of fiscal policy is going to be gold. All right, and number 5, the early 20th century progressive movement got its start from the suffering that so many Americans went through with the Panic of 1893. Teddy Roosevelt became famous as a trust buster, and J.P. Morgan, whom we're going to see a bit on shortly, was a major trust owner, and there were lots of others that were dominating the economy. Things like child labor laws, Pure Food and Drug Acts, etc., came out of their seeds were planted in the discontent and the suffering of the Panic of 1893. The growth of the labor union movement started. Franklin Roosevelt's New Deal, when the Depression came, was part of it. So this Panic of 1893 really has some legs and some roots through American history. This is the scene, just as there were runs on banks, this is the stock exchange when the traders are realizing at this point, holy cow, the stock market is going down. We got to sell. Well, we can still get something. And this is an illustration from Harper's, one of the early weekly magazines, showing the panic of the traders trying to dump their stocks as quickly as they could for whatever they could get. This was the typical scene. These guys, they're out of work. They're living in a boxcar or something like that, wondering where their next meal is going to come from, going house to house saying, can we split some kindling for you for a meal? What can we do? Where can we get a job? How can we feed ourselves and our families? The impact of this was enormous on so many Americans when you got all those businesses and all those banks and all those railroads croaking and everything headed downward in a deflationary depression. This Puck was a monthly periodical, and this shows the typical farmer, the silverite, after he's been run over by the gold express. that is established that no, there's going to be sound money, gold, not an inflationary currency that's going to bail you out, Mr. Silverite. Too bad for you. You and your wagon are wrecked pieces by now. Okay, here comes Jacob Coxey. Interesting guy. Small business owner in Massillon, Ohio. He basically, he had a couple of involvements, but his major one was silica sand, which was used to make glass. And when the panic hit and hit hard, it wiped him out just as it had so many others. In 1894, he decided, holy cow, we have to do something. He thought, I've got an idea. I'm going to try to organize a whole bunch of people out of work to march to Washington. We're not going to burn the place down or sack the Capitol or anything like that, but we're going to present ourselves and say, look, this country is growing. It needs roads. It needs bridges. We can build them. Put us to work. All we want is to be put to work so we can do an honest day's labor and get some money and help the country at the same time. It was an interesting idea. Here's the start of it. Basically, everybody loves a parade. You can see there's some musical instruments there and American flags too. Coxey went out of his way to try to find, first of all, people that had the knowledge and skills that they could do roads and bridges, but he went for Civil War veterans a lot. And that, this is only 30 years or something after the Civil War ended, that he and his group are marching on Washington. And the more he can make it appear that we're regular Americans, we're out of luck right now, we need help, but we're willing to work in return for that help. Here's a picture taken showing Coxey's army on the march, passing through towns. And as he went from Massillon, Ohio, toward Washington, D.C., people would join in, but also, some would drop out. Their families would say, you got to come home. We're not making it. You can't do this march on Washington. Ultimately, when he got to Washington, he had about 600 people or so. And the first thing he did when he got his Coxey's army to Washington, he went to the Congress building, and he was going to make a speech to his army to tell them, all right, now we're here. We're going to meet with Congress and tell them, we want to build roads. We want to build bridges. Put us to work. Well, when he was walking across the Capitol lawn, he was arrested for trespassing, for walking across the lawn, and thrown in jail. The government was not interested for lots of reasons. Philosophically, should the government even be involved in helping American citizens? They're out of luck. They're on their own. Or does government have a role when there's massive suffering in trying to, in some way, boost the economy? And there's that, plus the fact that congressmen were thinking, holy cow, if we put these 500 guys to work building roads and bridges, are we going to have 1,000 next week and 2,000 the week after that? Where's this going to end? So rather than even give Coxey and his army a minute's time, they lock up the leader, and basically they locked up a couple of them on kind of trumped up charges, knowing that the army was going to melt and dismiss and go back home. And that's exactly what happened. But it was interesting to me because it showed the US and the world that the American people were suffering and that they were willing to work in return for some form of government support. Now, Franklin Roosevelt was a kid at that time. He was about 12 when Coxey went through, and for that matter, when the panic came. And Roosevelt ended up during the New Deal being a very sophisticated but also cynical politician. But he was willing to try lots of things with government, civilian conservation corps, having guys out, digging fire lanes or whatever through national forests, the Works Progress Administration, on and on. Alphabet soup is what it's called, but trying to find stuff to get government involvement to help people. Is it philosophically right or wrong? There's still an argument about that, but it's pretty well accepted by now after two incredible depressions that, yeah, there's something that government ought to be doing to try to help people. It's a question of degree and how to pay for it as much as anything. Okay, Cleveland, the only president so far to have served split terms. He was a solid gold guy all the way, although Democrats at that time, the party roles have changed since the 19th century. They basically flipped during the 1960s as the civil rights movement came. But Cleveland was a strong gold guy and resisted. He ultimately ended up vetoing, although it was overridden, the Sherman Silver Purchase Act. Here's John Sherman, with his brother William Tecumseh Sherman was General Sherman who captured Atlanta and in September of 1864, and almost certainly guaranteed Lincoln a second term. Lincoln was not convinced he was going to get a second term at all. And without the capture of Atlanta, he might not have. But Sherman put through this, was the primary architect of the legislation that had the US government buying 4.5 million ounces of silver every month. Important and interesting in US history. And we're going to see in a sec the results of that in terms of the gold rush on the US Treasury. Yeah, here's the guy who, J.P. Morgan, and if he looks tough, he was. He had the biggest, he got Carnegie's Steel Company. He had a steel trust. He had trusts in railroads, trusts in banks, but he also, he was very astute and knew his own self-interest. And as there was an incredible run on the Treasury's gold, which we're going to see in a second, Morgan stepped up and offered $100 million in gold to the US government in return for high interest paying bonds that would be as good as gold, in gold, that would pay back Morgan more than a potential 100 million that he'd offer. Finally, we get to coins. The government had to end up Cleveland took up Morgan for 60 million because the Treasury was supposed to have a minimum of 100 million in gold. It had dwindled down to 9 million. And on the day that Morgan called a meeting with the president rather than the other way around, and basically at the meeting, which had the Secretary of the Treasury, the president, leaders of Congress, etc., Morgan knew that there was a creditor out there who had bonds that he could call for 10 million in gold, and the US Treasury had only 9. And Morgan basically stood up at the meeting and said, if you don't accept my offer at 3 o'clock, 10 million in gold bonds will be submitted for payment in gold, and you've only got 9. The US government goes down financially. It defaults. And Cleveland and everyone in the room realized, yeah, how do you know this? Well, Morgan knew that stuff. Okay, we don't want 100 million, but we'll take 60. And that turned out to be enough, especially when it was publicized, and Morgan made sure it was publicized, to quell the rush on the Treasury. So basically, even though he had selfish interests at heart, Morgan basically saved the US government fiscally. Okay, enough history. I'll show you mercy now. Now we get to go to coins. Hey, that's what we're all interested in, isn't it? We're going to take a look at silver coinage from 1892 to 1895 to see what the impact of this panic was on silver coinage. All right, now here's a couple of things that I found out as I researched. When you look at coinage figures from 92 to 95, you got to remember a couple things. One, Philadelphia always made more coins than the branch mints because Philadelphia served an area that had more commerce, more people than either of the branch mints. Okay, and two, and I found this interesting, when you compare mintages from 92 to 95 at either San Fran or New Orleans, it first looks like there are greater mintages for 95 than for 92, and literally there are. But It's more a reflection of low mintages of those branch mints in 92 than of high ones in 95. Okay, and 3, the population of the US grew by about 4 million people, about 6% from 92 to 95, from the 1890 census total of 63 million. Okay, so of course there should be some coinage increase by 1895 just because there are more people out there who are wanting to use US coinage. All right, so here's the Barber dime, a very popular design to this day among collectors. And I picked on the 1895 figures with those caveats that you just heard in mind. And we don't have to dwell too much with these, but take a look at the bottom total. Basically, the 1895 coinage total compared to 1892 was down 86.7%. And that the dime was a commonly used unit of currency in the 1890s in an economy that was not hyperinflationary or anything. How about quarters? Well, all right, down almost 30% from 92 to 95, you know, and you can see the stats there. Half dollars are a little bit of an anomaly, especially when you look at New Orleans. You say, holy cow, 1895 is up 470% from 92. That doesn't seem to fit the idea of reduced demand for coinage. Well, there's some explanations for that. And if you take a look down now, some likely answers part. Okay, in 1892, that was the first year of issue for the Barber half, and the first time in 31 years that New Orleans had minted any half dollars. Okay, so no Barber halves were made there until after June 30th. So the 1892 mintage in New Orleans was low. All right, only 20 die pairs were sent to New Orleans then, while the Philadelphia and San Francisco mints got 32. So in 92, New Orleans is limited, but in terms of how many can they make. All right, and lastly, C, New Orleans bought slightly over 2 million ounces of silver for all silver coinage in that year. That was 13% of the amount the Philly mint got, or 79% of the amount the San Fran mint did. So conclusion, it was not that the 1895's New Orleans mintage of Barber halves was so high, but rather that 1892's mintage was so low. All right, it also appeared by 1894 or the first half of 95 that the economy had turned the corner. Our historical researcher, Charles Whitten, had that was his thesis, that there was light at the end of the tunnel. And that could have led to an increased production of this denomination in 95 because it was used a lot when banks had to trade money back and forth. In effect, they often would do it with bigger coinage, $1,000 bank bags or whatever of Barber halves. So that may also have been part of the 1895 increase picture. Silver dollars. The Sherman Silver Purchase Act was vetoed in 1893, but they'd been buying so much silver at 4.5 million ounces a month that there was a surplus that lasted obviously up till 1904, when the last of the traditional Morgans were made. But the mintages for 1895 are all pretty catastrophically low. The 1895, no circulation strikes exist. 12,000 were allegedly minted, almost certainly all melted in the 1918 Pittman Act as a favor to Britain to provide silver to Britain to support the Indian rupee, while the Germans in World War I were trying to create panic there. 1895 down 83.6% from the 92 95S, 400,000. I mean, these mintages sound large, but they're tiny, relatively speaking. Silver dollar people would know this. Down about 2/3 from 92S. So the whole total down 86.4% from 1892. These are key. You find any 1895 silver dollar, you got a treasure. All right, now we come to the study that I did using the October gray sheet. as a representative figure for the coin market. And what I did was I picked the very fine 20 column listings for Barber dimes, quarters, half dollars, and Morgan silver dollars. And what I wanted to see was, okay, what are the common dates priced at in very fine 20? And I've got them listed there. A common date, Barber dime, $10, $22 for a quarter, 124 for half, 35 for silver dollar. Then I wanted to look to see, okay, during the panic of 1893 years, are there keys that to this day are listed in gray sheet at double the common value? Well, take a look at the red. Every single Barber dime date from 1893 to 96 and every mint, they're all key dates. They're all twice or more what a common date is. How about quarters? Most of them are rare. A couple commons, and remember the Philadelphia mint situation again. Philadelphia always made more. The few commons in Barber quarters, 1, 2, 3, 4 of them are all Phillies. Barber half dollars, rarities again. And here was that anomaly situation comparing the 1892 to 1895 mintages. But there are some common half dollars that don't double. But if you take a look, even there, you know, they're better than the common dates. You know, if a common date half dollar is 124, the cheapest one there is 139, which is a little nudge above. But there's 200, there's 160. So they're a step above. Morgan dollars, mostly, man, 1893 to through 96, mostly rare. 96 as mintages increase, and as it appears the Panic of 1893 is dwindling finally. There tend to be some commons. So there's the picture in very fine. Now let's take a look in MS63. Did the same thing. Took common date figures from the October gray sheet of this year for dimes, quarters, half dollars, silver dollars, and then looked to see where there was a doubling or more of the years impacted by the panic. And here we are again with Barber dimes. All of them qualify as MS63 keys using that standard of, okay, they're going to cost, they're going to list on gray sheet wholesale for at least twice what a common date would. And this is coming in the summary conclusion, but especially you guys, you people out there that are Barber dime people, do not hesitate to gather up the key dates represented by the Panic of 1893 years, from 1893 through 1896 for sure. In whatever grade meets your standards, you know, would fit with your set. Target them, get them. They're not out there in quantity. Well, Barber quarters, let's take a look there again. You know, same thing in MS63, where there are some strong keys going on there, but some commons, not all Phillies. Some of the branchments are starting to, their production figures are starting to come along. Barber half dollars, a similar deal. There are a couple of rarities there. Holy cow, when you have to pay $2,600 to get an 1896 SMS63, and that's at a wholesale gray sheet figure. You're dealing with some pretty strong money there. The commons, again, Philly mint commons, pretty much, and some of the branch mints. Morgan silver dollars, shoot, there's really only one common one, using the standard of, are they twice as expensive as a common date? If yes, we can artificially consider them to be key dates. Look at all that list of Morgan dollars that are key dates: 93, 93 CC, 93, all of them practically, except for the 96, pretty much the sole common one out of the year. And the same message there as to Barber dime collectors. If you're a Morgan person and you have a shot at any Morgan dollar from 93 through 96, other than 96 Philly, you better consider reaching for the wallet. Okay, so here's kind of the summary conclusions to the presentation for today. There are some incidental exceptions, especially in the barber half category, but essentially the Panic of 1893 played a really major role in lowering mintages of almost all, I'm hedging there, almost all 1893 to 96 silver coinage. Well, that obviously has an impact today, as we just saw looking at those gray sheet wholesale figures in terms of which ones are key dates, etc. All right, so there are generally lower mintages to start with during these 93 to 96 Panic of 1893 years. And they've had to pass through over 60 years that included, and I'm saying 60 years there to put it past the Great Depression, that included two major economic depressions, Panic of 1893 and the Great Depression of the 30s. Obviously, if dad or granddad had a coin collection in 1893 or in, say, 1935, and the family is struggling to put bread on the table, everyone takes a long look at grandpa's or dad's collection and says, I think we have to take this nice silver dollar and go buy some bread with it. So that had obviously that is part of the picture of taking top grade examples out of collector possibility, because many of them circulated out of necessity, as Americans who are down on their luck are saying, I can't keep this coin collection. I got to feed my family. So, all right, that has a further impact on today's coin collector. All right, and you guys have heard this 10 million times. Fine, it gets to be 10 million and one. If you follow the axiom to buy the key dates first and, quote, buy the best grade you can afford, this, I'll suggest this strongly, this is where you start. If you're into the series of coins that passed through the Panic of 1893 era, those need to be your targets. The common coins, they're always going to, well, always, they're pretty much always going to be there. These key dates that were scarce to start with because of low mintages, that saw increased circulation wear, et cetera, if one of those comes along, there's a point where when you want to look at gray sheet and say, oh, I should only pay 200 for this coin, there's a point where you may want to say, I got to go higher. I may not see another one like this again. So there's my 2 cents worth for you guys to say, this is a good place. This is the place, in my humble opinion, for you to focus your efforts on getting the coins you want for your set way before you worry about the ones that are out there, that are common, that are available. Target the keys, target the best you can get. And that, folks, is my presentation. I'm very appreciative of the opportunity to work with you on this, and to obviously to Andy and to the NNP for them having me. But I appreciate it very much. And Andy, if you can click back in and take questions or whatever, we'll take a shot at that. I enjoyed this a lot, and I hope it wasn't too painful for all of you who hated history class and wanted to pass notes to your girlfriends and stuff. But forgive me for indulging in those areas. I hope it wasn't too painful.
Very good, Bob. I thought it was very interesting, so I enjoyed it. If you want to go ahead and stop sharing your screen, you can do that now.
Okay, stop sharing screen.
Yes, so there should be a red button.
Yep, I see it.
Awesome.
Okay, there I am. Yep.
Perfect. Now everyone can see it nice and big, and we'll go into our questions and answers. So if anyone has questions, feel free to drop them in there now, and we will take a look at those now. First question, would this be called a recession or a depression in today's language?
That reminds me of a kind of a funny cliche. The old cliche is a recession is when your neighbor is out of work. A depression is when you are out of work. What would this be called today? When you get an unemployment rate that is flirting with 20%, that's a depression. I mean, when the Great Depression, the worst one ever had, it was easier to keep stats in the 30s than it was in the 90s. And it's pretty well established that, I think it was 1935 or 6, that unemployment peaked at 24.3. Once again, I mentioned this a couple of times. I've seen stats that vary anywhere from, well, 10% of the working population didn't have a job to, well, 17, 19. I've seen one estimate of over 20, but it's ballpark to the Great Depression. And there ain't no doubt that wasn't a recession when you got 1,800 businesses croaking, going under, and however many railroads and banks. It was incredible. Depression all the way.
Okay. We have another one. You concentrated on silver coins. Did your analysis extend to base metal coinage, such as cents, nickels, or to gold?
I didn't want to, as it is, you could see there was all kinds of data, and I didn't want to bury people in data. I guess I could do studies on that. That'd be interesting. I'm always been interested in numismatic gold, and with the run on the treasury and the depletion down to 9 million ounces when it was supposed to be at around 100 million ounces, that one in particular interests me. Copper coinage and 3-cent nickels and so on. I think there's something that can be done there. I haven't touched it, but again, my motivation was primarily, the old, and I'm not being insulting now, honest, but you've heard of the KISS principle, keep it simple, stupid. I'm the stupid one, but it's so easy to get buried under data and then look at Indian cents here, and then look at gold 2.5s there. There's a point where the audience just, they pass out in their seats and they start to snore and so on. So I did want to just focus on the silver coinage area, but that's an interesting question. And I think in particular, as I start to feel better and get rid of my sling and get over COVID finally, gold in particular is something I think I'm going to poke at a little bit and see if there's something there. And if there is, then I'm likely to poke at copper and, 3-cent nickels and, Liberty nickels and so on, and see about that as well. But right now it's unexplored turf. And by the way, if any of you guys out there, if any of you people out there are looking for a research project and want to do it, I'll yield. You can have it. But I'm curious personally, and I'll take a shot at it.
Awesome. The same thread asks, are there sleepers among these coins? Are there any sleepers?
Well, how do we define sleeper? We define sleeper as an underappreciated, undervalued coin that if you get it, has potential either for increased demand or increased value in the future. I think you never want to say never, but the fact that there's so many limitations already on the size of mintages, etc., finding a true sleeper would be a little bit hard. Do I think there are, and I'm not a barber, dime collector, or quarter collector. These are not areas that I have anything other than a peripheral involvement in. But I bet that if there are dime, quarter, half people out there that are part of this group, they could say, in my opinion, this date and mint is a sleeper that's underappreciated based on gray sheet and based on the market. And I think there's a point at which it'll surface. I'm not in a position where I could speculate on that. Like I say, you never say never. I think there may be some, but I think that it's limited than a lot of other denomination areas because of the factors that you all saw and heard in this presentation.
Okay, awesome. There's another question along the same lines. So if you don't have another answer, you can just not answer this one, I guess. Do you think issues in these years are undervalued based on the mintages and prices that we looked at?
You know, and there I have a slightly stronger opinion. I guess I feel that in coinage areas that are widely collected and have proven themselves through the decades, that and that I think is the case here, that geez, low mintages ought to mean something. In particular, there's been a lot of, and this is a separate subject, but for example, NGC has come out with the NGCX grading scale, which in my opinion, in strong part, is trying to reach out to the gazillions of people around the world that have so much money that they're pouring into art, that they're pouring into, Honus Wagner baseball cards or whatever. And they're trying to draw them into numismatics. That has the potential to be very good, because if some of those very rich people decide, oh, this is kind of fun, I'll try a collection. And if they get started, they may be very easily coaxed into looking at what are the key dates here? Why are they the key dates? Oh, they're scarce. Oh, there aren't very many that were ever made in the first place. Well, I think I want to get one. So there is some, to me, there always is some potential in a proven series, like any of the Barber series or the Morgan Dollar series or the Lincoln Cent series. There's potential for low demand items. And even, you know what, even if they don't turn up, say you live 50 years and you're waiting for your investment to double or whatever, I think as what I call a colvestor, a combined collector investor, that you can't really put a price on the personal satisfaction that you get by saying, look, there are only an estimated, I'll make up numbers now, there are only an estimated 75 or so of this coin that exists, and I've got one. That's cool. Is it ever going to amount to money? Like I say, if new blood comes in, who knows, my crystal ball doesn't work well enough to go beyond saying low mintage has the potential, if demand even goes up a little bit, to amount to something. But then we come back to personal satisfaction. I've got a couple of coins. I got an 1892 2.5. Oh no, 1877 is the one that's lowest mintage. If I remember right, the total mintage was 1,638. Huh? Is it a great rarity? Nobody collects that whole series, basically, except for very rich people. But how many of 1,638 are still around today? And I've got one. There's some personal satisfaction in that. Okay, end of filibuster on that one.
Someone else asks, how do you reconcile all of this information with the relative high mintage for the 1895 proof?
Oh, the 1895 proof what? Proof dollar?
I would assume dollar.
Pardon?
I would assume dollar. They didn't specify.
Okay.
But
that mintage was 880. And remember, as you saw on that very first slide that showed, the war of wealth, at the same time that gazillions of everyday Americans are suffering in the panic of 1893, there are a lot of rich people. Could 880 of them afford to buy a proof Morgan dollar? Yeah, you could either buy singles or you could buy a set at that time. Things like, proof Indian cents, for example, were sold in greater quantity because I don't know what the Treasury charged for them, but it wasn't too much over face value. And probably the same thing with, I don't know what one of the 880, 1895 Morgan proof dollars cost coming out of the mint, a few bucks maybe, but there were people who had that kind of money. And out of the 880, I've seen estimates saying roughly 600 or so survive in all conditions, but some of them circulated. Some of them were in grandpa's collection or whatever, and bread needed to go on the table, and out comes the proof dollar, and it gets spent. So yeah, that was for a dollar coin at that time, that was a pretty high mintage. But this is the Gilded Age society where a lot of rich people, just as today, where there's extreme income inequality, there are people at the top that have plenty of money. And those are the kind of people that NGCX and others are trying to draw into numismatics because they have all this money. Paul Allen's art collection recently auctioned for, I don't even know how many hundreds of millions. The money's out there. Can it come to numismatics? Yeah, maybe so. In 1895, did some of it go to proof Morgan dollars? 880 did.
Yeah. Interesting stuff.
Yeah.
Someone asks, what got us out of this depression?
You know, and that's interesting. In US history, there have been a number of panics. It's part of our economic system where every X years, you know, the last one before this was kind of 2011. There was a tech crash around the turn of the century. Basically, those things can solve themselves, but it's a question of how long does it take and how much suffering does the average person have to go through before things stabilize. Usually there's some kind of speculation involved that starts a row of dominoes going. It's been pretty interesting to see what's been going on with FTX and what Sam, what's his name, SBW, I guess are his initials, that whole cyber area, or Elon Musk with Twitter, and everybody quitting on him. Is this starting seismic vibrations in those areas that are going to be unpleasant? Maybe so. But if it happens, ultimately, somehow, over time, things will work back towards stability. But once again, it comes down to how long does it take? How many people suffer to what extent? Who gets involved, whether it's private sources, whether it's charities, whether it's the government, whether it's the Fed. Everyone's trying to address these things, and eventually they work out. I mean, you know, we haven't, at least yet, totally gone off a fiscal cliff where, like in Zimbabwe, where the dollar, where it takes 10 trillion gazillion US dollars to buy a loaf of bread or whatever. Is that going to happen? I don't think so. But are we going to go through good? We've gone through some pretty easy times since 2011 fiscally. Well, now maybe we're going to have some rougher sledding for a while. I think my personal 2 cents worth, and I said I don't have a crystal ball, but I think we are either in a recession or about to be in one, but I don't know what that means in terms of duration or depth or breadth at all. And I don't even know if I know what I'm talking about when I come out with that speculation.
Commented about the name that you were trying to recall, the SPF. Sam Bankman Fried or Freed?
Sounds right. He's a guy 30 or so. He was a multi-billionaire, and now they're, as I understand it, and I don't know this stuff well at all. It's like technology. I don't know it well at all, but I understand that there are concerns about whether he applied money that really wasn't his or his. I don't want to use the word trust. That's not the right word. His business ventures. Some money may have gotten misapplied, and that is, if that's happened, and if it can be established, then it's a question of how much and who loses. And it's one of those areas that we'll have to see what happens tomorrow and next week and next month. And it's an area, man, that's something I know even less about. But I have a curiosity, and like everyone, we'll just have to wait and see.
Yeah, follow that for yourselves and see how that turns out. Another question, were other countries, specifically in Europe, like England, also impacted by this depression?
One of the points and one of the slides back there was that, England was really impacted by the crash of banks and by international trading. And that was where the point was made that people who who had US stocks, either directly or indirectly, dumped them and wanted gold because their own banking system was teetering in England at the same time that in the US and elsewhere in Argentina and in the rest of the world, it was also teetering. But yeah, the draw of gold from the treasury was exacerbated by Europeans who thought, oh, I'm holding stock in, I don't, in US steel or something like that. Where's this going? I want gold. I'm going to turn this in and get gold. So yeah, that was part of it.
Okay. How many of those coins were melted down, contributing to the scarcity?
That one we'll never know. We'll never know. There have
Yeah.
been all kinds of, when the Hunt brothers, played the commodity market in 1980 and wanted physical silver for all the gazillions of paper contracts that they'd bought that nobody ever wanted physical silver for in quantity. That forced the price of silver up to $50 or so an ounce, January of 1980, I think it was. And geez, people were melting, grandmother's sterling silver place sets, taking them, taking coinage and getting 30 times face value or whatever for it. So during those melts, there tended to be melting of common stuff, but who the heck knows? It's like when Roosevelt's executive order called in gold and all kinds of gold coinage came in. And it was never sorted out in terms of, oh, well, here's a common date, 1924 St. Gaudens 20, as opposed to an 1850 $20 Liberty. They got tossed in the melting pot and they're sitting in the form of bars in Fort Knox right now. So that's absolutely impossible to guess. The tendency would be common coins where it was convenient and effective to sort them out. You'd sort out common coins and melt them first. But was there a point where semi-key or key coins just got thrown in the pot and melted? Yeah. We'll just never know.
And that's very unfortunate, but it is what it is. It looks like we have one more question here so far. So if anybody else has questions, put them in there now. Do you think the very low mintage of the 1897 half dollar is a consequence of the 1893 panic?
I haven't looked at that one specifically, and it's not an area of interest. I wish I'd printed out what the mintage of that was. As I indicated, there were a lot of reasons why mintages for half dollars in particular in New Orleans were really low in 92 because they hadn't done any for 31 years. And that could make mintages later on look higher. I don't know enough about the 97.0, and I haven't even got a red book here on my desk handy to reconfirm what the mintage on that one was. The person who asked the question, I would wonder, geez, I don't know if I don't think I can get back to my presentation and try to find the slide to see what gray sheet was or what mintage was, and it may not matter. But if 97.0 in a barber half is low mintage, or in gray sheet tends to show a higher price than common, that'd be another one to target. Was that a direct impact of the panic of 1893? Historians speculate on, all right, when did this really end? Some say 1896, some say 1897. Probably, even that's a little bit hard to tell. And if we say that the panic extended into 1897, could that have had an impact still on mintages of $97 or half dollars? Sure, could have. But it would have been fading out for sure at that point, in particular, because by then Morgan would have bailed out the US Treasury, and the perception, boy, perception is reality, is the cliche. And if people perceive that stability is coming when they want it to come. And Morgan and probably the government, Cleveland wasn't really totally loved for embracing Morgan's offer, because it looked like Wall Street was owning Cleveland and the US government. But you know what? With 9 million in gold and a creditor who at 3 o'clock is going to say, I want 10 million in gold, you got to do what Morgan wants.
Yeah. So the attendee that, I assume the attendee that asked that question, put in the chat the mintages. And so the 92.0 was 390,000, and the 97 was 632,000. The ones in between there were at least 1 million. But I think the answer is still the same. You can't really tell if that was because of the panic or for some other reason. So,
but let's go back to that idea of a relatively low mintage or even a sleeper, the question asked before. Now, here I am, a non-collector of Barber halves, but from what you've just said and what the contributor just said, could the 97.0 be a sleeper in the grade that you want? That the possibility crosses my mind, just based on what's been presented here. Maybe that's one that ought to be acquired when it shows up.
Yeah. So whoever commented that one might have found a new coin to target. Add one to your collection. Maybe it'll go up in value. So there are no more questions in the queue. So I'll start to wrap up. If you do have any more questions, put them in there now and we can try to get to them. But for all the attendees, we have one more presentation for this NNP Symposium, and that'll start at 5:30, so in about half an hour. That's the Coin Show podcast. So definitely tune into that one. That one will be a lot of fun. That one's always a hit. So we hope to see you there. And Bob, thank you very much for the presentation. We had a few comments in the queue as well, just saying thank you and that they enjoyed it. And it's really fun to see the history and all of that behind it. So thank you for volunteering your time.
Thank you.
And I guess that concludes our presentation. So everybody have a great rest of your day.